think this might be maybe the hottest topic on stage today. So thank you for joining. And I think one of the things we're going to demystify is really where the market is. I think we can all, sit on the outside, kind of see what's going on, but these are all players at the white hot center, both startups and larger companies building out really unique solutions in agentic payments. So we're going to outline what's actually going on, where we think the world's going, and hopefully break it apart a little bit more for you. To start, can you each introduce yourself and explain what specifically you're doing in the agentic payments world?
I guess that's me first. Hey, I'm Erik Reppel. I'm the head of engineering for Coinbase Developer Platform. I'm also the author of a standard called X402. And so Coinbase has been doing a lot of work both to enable agents to do stablecoin payments and then standards for how to convey payments on the internet. And then 3 weeks ago, roughly, we launched an agentic wallet. And so if you're using Claude or anything else, you can kind of like one-click install a wallet for your agent, and it can do stablecoin payments, pay for anything that's X402 enabled on the internet.
Cool. I'm Kahlil. I run a company called Natural. I wish we owned Natural.ai, but we haven't quite circled on that one yet. Company's 204 days old today. We've publicly announced that we've raised over $10 million, and we build infrastructure to help agents move money, whether that's paying money, collecting money, storing money, et cetera. So.
Hi, and I'm Charlie Wilson with Stripe. I lead our startup sales segment or organization today. Stripe, you can imagine, is doing quite a bit in agentic, both in terms of protocol development, retrofitting capabilities to make everything agent accessible, but pretty broad-based in that respect, and obviously in service to our own products and services, but in service to other PSPs, other systems as well.
Awesome. Well, just to start, I mean, we heard what you're doing. Let's go under the hood. What is usage actually looking like? Is it experimental? Are we seeing use cases that are taking off? Kind of set the stage on where agentic payments actually is today. Maybe we'll go reverse order. You want to start?
Yeah, happy to. So there is a lot happening. We've got a handful of billion-dollar-plus retailers that are actively transacting within the context of agentic. We have a target to the end of the year to kind of have tens of thousands of agentic transactions daily. We've got a long way to go on that. Clearly, there are a ton of startups that are investing and participating. Maybe a couple of the dynamics that we see today, and I would say there's probably everybody understands a tremendous amount of curiosity. Stripe has had retailers and name brands that historically were very difficult to get into now coming to us to try to understand what's happening in this landscape. So big and small companies alike are looking at this, some exploring, some actively experimenting, and then some much farther along. You look at kind of like transactional activity. We kind of did a survey. Like most of the agents and AI applications are of the B2B context, so like 90% plus. You turn around and you look at like the volume. Where's the volume coming from? And it's kind of inverted, where more B2C is relevant today versus B2B. However, there's a catch if you take out companies like OpenAI, and that goes back to what you would expect, where most of the activity today is happening with B2B applications, a little bit less on B2C. Most B2C seems to be happening within the likes of a ChatGPT. We think most of the monetization in the short term will come from B2B.
A good segue to B2B.
Yeah, so we're probably the quietest of this group so far. We haven't really announced anything. I'll actually tell you guys for the first time that Monday we're coming out of stealth. So if you go to our website, there's basically no information.
You heard it here first, everyone.
Yeah, it's an exciting day. We're doing a lot of work. So I'm trying to come in and out of this conference so that we can make sure that everything goes smoothly. But I'll say we incorporated on August 12th of last year. We've spent basically that until now working entirely just on very low levels payments infrastructure. And the reason we took that approach was we think this market inflects very quickly and very fast. And in that world, there's not a lot of room to just like have some high level wrapping abstraction of other vendors and eat their margins. And so we're preparing our product to basically go from like, how do you go from what is functionally incredibly small TPV that agentic payments process to billions of dollars very quickly. And that is the positioning that you'll see us take increasingly over the next quarter.
We've seen over 110 million transactions by agents in the last roughly 4 or 5 months. we typically see about, on an average day, about 20,000 transactions on X402 done by agents. We've had days as high as 500,000. But over, and those are all like transactions that we have like tagged in our system as having done like some valuable action rather than like, there's a lot of noise always in payments. And so I think the killer use case that we've seen is microtransactions. And we have about 100 million transactions, and I think we're coming up on about 65 million in volume in the last 6 months. And you'll notice that that's like sub-dollar. And so the real killer use case of X402 so far has been, hey, my agent wants to do something. He wants to do it like 3 times. I don't want to have to go and like set up an API key and go add a credit card on file and go through all this friction. I can just give my agent a wallet, and now it can now use like over 10,000 services that have X402 enabled, and your agent could just pay for it ad hoc on a pay-per-use basis. And this is really possible because stablecoins are kind of jet fuel for agentic payments. Like you can send anything from a penny to $1 million with stablecoins for a cost of roughly 1/10 of a cent. And so that means if your agent wants to pay 5 cents for access to an article or to use some API that'll help it do its job better, you actually can do that. And we see it happen tens if not hundreds of thousands of times a day.
Erik, you mentioned a couple of use cases, whether it's accessing content or paying for other services or kind of agent-to-agent payments. Have you seen any trends around what that is, or is it pretty evenly spread? Where are they clustered?
One of my favorite things about X402 is that we have a chart which is like X402 payments by recipient, and there's not like one dominant use case. There's not like one, cyclical trend. It's just, hundreds, if not thousands of different use cases, all kind of like stacking up to a very like nicely distributed graph. And so, the typical things that we see are agents paying for data. So I think the most dominant use case, if there is one right now, is like paying for access for like what are trends in markets, or a lot of people are writing like trading bots that want to like pay for proprietary data to help them make better decisions. That's probably I'd say the greatest use case right now. But we also see a ton of usage in things like image generation, right? Like Claude Code can't generate images. And so what do you do when you want to generate an image as a developer? You can like go and set up a fall.ai API key, or you can have your agent just pay 25 cents to generate an image.
Cool. Maybe in reverse order. So we all heard about different flavors of agentic payments. Who are you competing with? Who's complementary versus adjacent? I mean, obviously payments writ large is very fragmented, so this is nothing new, but how do you think about what you are building today? You want to kick it off?
Yeah, for sure. So the internet is made of like tiny miracles, and one of these tiny miracles is that any browser that you can use works with any website that you want to visit. Doesn't matter if you use Chrome or Safari or Edge or anything else. Like, you don't need a proprietary browser to go from website to website. And so that doesn't really apply to payments right now. Right? And so X402, we think of it really as an open standard. And so we're not actually trying to compete with anybody. We're trying to embrace everyone and get everyone on the same page and say, hey, let's all agree to how to like convey payments, and then the network that payments occurs on can be what makes the most sense for the transaction. If you're paying, sub-dollar, stablecoins make a ton of sense. If you're booking a flight, you probably want chargeback protections, put it on a credit card, et cetera. And so, you probably want a PSP in the loop. And so I think that the question is kind of like, in my mind, the wrong question. It's not like, who are we competing with? It's like, what are we enabling, and how are we going to grow an ecosystem that is as open as the open web is?
We are designed not to be very open. I think the product is entirely closed, and I think there's like broadly this market view that people like data privacy. Like, people are like, oh, I want control of my data, and I don't want companies like to have long form access to my data. And I think people say that, but they don't actually employ that belief. And I think some can be said to be true of like what is of the crypto world. And so like our infrastructure is built to be like fiat crypto interoperable. We run the payments over like whatever is most efficient. We don't tell you as a user what is happening. Like, we report one balance to you. That balance could be held in a number of different FBOs, or it could be held in stables. I think the importance to us is just like, how do we abstract the complexity for our user such that they don't have to know anything about payments to implement payments. And sometimes that means that we take very opinionated stances about who we work with and who we don't work with. And the reality is that means that we open ourselves up to compete with a lot of people, and both people on the stage. So yeah.
Kahlil's going to bring the spice today. So.
We're a little bit more probably in the mind of Erik in that, look, we're just trying to enable capability that we think is pretty profound and going to kind of revolutionize the world. So, like I said before, we work with large name brand retailers. We work with major platforms like Etsy, WooCommerce. We work with OpenAI, ChatGPT of the world. And you think about the things that we're building. I mentioned before, kind of protocol. Again, just kind of creating a mechanism where everybody can kind of participate. But even our product suite, you think about fraud, risk, security dynamics that agents will bring. It'll bring new things that we probably don't fully understand. But we want our product suite and our risk suite to be applicable to other platforms or other use cases, even if they're not using Stripe necessarily to process payments. So we look at kind of a broad suite of products and an initiative or effort to kind of enable the broader industry and work with the industry as opposed to really compete with anyone in particular in the industry.
So let's zoom out, and I'll stick with you, Charlie. Zoom out, 5 years from now. What does the landscape look like? We've talked about kind of open versus closed. What percentage of commerce is agent initiated? Like, what does the future look like? Kind of paint your vision for the group today.
Yeah, my answer to this one might be shorter than the other two. I think short answer is I don't know. I would agree with Kahlil on that. Like, this is happening, and it's happening very quickly, and it's happening right now. I think another data point that we've seen is like a 4x increase in onboarding of merchants using CLI within our system, which is a great proxy that like this stuff is happening at a really, really rapid clip. I think there are a lot of hurdles, like when you're trying to create, obviously product discovery came up, and how do you get the cooperation and the participation to kind of create two-sided market dynamics? I would expect it will be a collaborative effort, but Kahlil may have the model and it may be more closed. We'll see, but what I would say is it's going to have substantially increased. It's going to, what feels like a trickle and just the beginning right now, I expect will be fairly overwhelming in how fast it did materialize and how fast it did take shape.
The way we frame the opportunity is, I think over the next decade, agents execute a majority of global payment volume. And in that world, there is like meaningful agent interoperability, and agents are the dominant financial actor. And obviously there's a lot to happen between the point we are in today and then. And the order of operations might be slightly different, and that's okay. But I think the important thing is just that, like, in that world, there needs to be very intentional bounds about how you build for agents being the primary actor versus humans being the primary actor. And when you evaluate everything from a first principles perspective, a lot of small decisions change. And when a lot of small decisions change, the entire product feels radically different.
I have a concrete answer for you, but can I ask a question of the audience real quick?
Yeah.
So by show of hands, who would consider like OG ChatGPT an agent? So nobody, one person, okay. Who would consider Claude Code an agent? Smattering, okay. Who would consider OpenClaw an agent? More people, okay. I ask these questions because I think that people, like, what is an agent is like the kind of buzzword of our time, right? And my definition of an agent is background, intelligent, autonomous compute. And so it's like something that's running around in the background, is smart, and it knows how to do stuff for you. And with that kind of frame, it's like, okay, what is an agent actually going to do for you? What agents do I want? I want an agent that just like manages my household and like orders me toilet paper when I'm running low on toilet paper, right? I want it to like take things off my plates and make me more productive and enable me. And so of course it's going to need to pay for the toilet paper, right? And so, but if you squint, that's actually all the things that like the browser did for you, right? Like we went from, you have to go to the grocery store to go and buy stuff. But now you can go on your laptop and order toilet paper off Amazon. And that's much better. And so I think it's like the increasing ability to offload and automate parts of our life that don't serve us. And so let's assume that everyone wants like the household managed toilet paper. I suspect that like all the transactions, or at least the majority of transactions you see that are led by a browser right now, will be led by agents in 3 to 5 years. And I think that if you like imagine that, and then you imagine like, okay, those agents are now gonna like, we're breaking the ad model. Like the ad model is gonna like cease to exist in the same way if it's agents that are unsusceptible to ads that are like doing all these transactions. What replaces the ad model as like kind of the backbone of the internet? I just suspect it's micropayments. And so I think you get like 80 to 90% of all transactions that are browser led right now. Then I think you create a new category that's potentially the size of the ad market via microtransactions. And so I suspect we're at 1 trillion payments a year in like 5 years.
Let's stick with this because I want to go to business model, and there's a couple of different pieces. I mean, you're a open source protocol. Like, tell us about underlying business model. And Charlie, I'm especially interested to hear from you afterwards around what's the role of interchange going forward as we look at this model. So maybe we'll start with you, Erik, Charlie, and then end on Kahlil.
Yeah, well, I think the business model for X402 is like, one, facilitators charge a fee. We charge 1/10 of a fee, flat rate per transaction right now. I think two, like you're gonna see different like app store and kind of marketplace models emerge for like recommending services to agents. And then three, Coinbase has USDC, which is the largest US-based stablecoin, right? And so it's, if we can get a meaningful amount of transactions to occur in USDC, that's broadly good for Coinbase. But I think like what are the business models of the agents of the future is like a question that is, you know, obviously the question everyone in this room wants to ask because they want to invest in it. But like we all can't even agree on like a definition of an agent right now. I think it's like, let's just build things that are really valuable and make our lives better, and we'll figure out the business model in like a year or two.
Let's talk about interchange.
Yeah, I'll take a crack. And just by way of background, I've been at Stripe for about 4 years. I've been involved in horizontal vertical SaaS businesses as a founder, so in many of your shoes, and I was at Visa for a long time. So I've been kind of in and around the payments landscape for a long time. One, I agree. Like you think about the micropayment dynamics, the machine-to-machine activity. There's a ton of opportunity for stable for a lot of microtransactions. You take the use case that everybody talks about is like the travel agency. You know, the agent that goes and books your travel for you, or buys predicts that your child is starting the new school year and what your child's interests are, and goes and buys the outfit for the school year. I think it's really going to depend on the use case. And I think there will be probably a lot of room and a lot of space for, lots of different participants and lots of different rails and mechanisms. So I'm probably less inclined to say that interchange goes away, and that payment type necessarily gets leapfrogged or put extinct. But I do think like there's going to be room for lots of other alternatives, lots of other mechanisms. Kind of one final point. I lost it, but it'll come to me. But you're going to see. I would follow the monetization models. You think about how much AI can now facilitate outcomes, and so if you just kind of follow the monetization models around there, that'll probably inform the type of payment that is going to be used, or the payment that's most applicable or most appropriate.
You think interchange is a share of payments and that across the web loses share?
I mean, sort of by definition, if you believe in stable is going to kind of grow as a category. So by definition, it's going to shrink the share of total on a card payments basis. Again, stable is brilliant for international money movements as well, which I think we're all well aware of. So as a share of total, it probably declines in absolute context. Is it going to go away overnight? I'm probably less a believer in that.
Kahlil, I know you have some strong opinions here.
I'd answer the original question very straightforward. We have deposits held with Natural; those are interest-bearing. We have a take rate on TPV, and then we have like various small spreads on like instant card payouts. I think there will be meaningful push on margin compression on interchange. I feel like that is unavoidable. We designed our infrastructure to own both sides of the payment, and so like we don't touch the card networks at all to execute payments, and so functionally our cost of execution, excluding credit payments, is like close to zero. if you include cost of capital, it's still like blended better than Stripe. But I think Stripe is hedging with stables, obviously, and I do think there is a meaningful push down in like what the average transaction value looks like.
And why don't you go a step further on, is crypto the dominant form? Is it siloed around microtransactions? What are the trade-offs?
I think the like prevailing narrative on agentic payments can only work on stables is just like blanket wrong. I think if you are evaluating that from a what is best maybe today, like stables are helpful and they're helpful for a number of reasons. But the way we architected ourselves was intentional, like to if you own both sides of the payment, if it's a ledger update for us, then like our cost of execution, our latency, our throughput is more scalable, cheaper, and faster for our end customer than if we were to execute on stables. And so like all domestic volume for us, which is US plus UK, Canada, we own all internally, and then we only settle on stables in international transactions. And so I think like the market sentiment of like stables is the only option is kind of just like the initial trope that this market has and like doesn't materially play out to be true.
Erik, I have a feeling you have an opinion here.
I mean, how spicy do you want to go? I mean, I agree, right? Like, I think that there are types of transactions you just cannot do with stables, or you cannot do with fiat or cards, right? Like, if you're gonna like process a 1 cent payment for me, right? Like if you process a 1/10 of a cent payment for me, like these.
We can actually do that.
I believe that you can if you control both sides of the payment because it's a Postgres update. But if you're trying to pay someone who isn't on natural, go and do it, right? Like this is kind of the issue is like you either rely on someone being on both sides of the transaction, in which case the market of things you can pay are just the things that happens to use the same payment provider as you have, or you use like Visa, MasterCard existing credit rails, right, which are not well positioned for that. But this is like X402 actually, people think it's a stablecoin only standard. We're actively working to integrate fiat into it because I think there are transactions where right now today it is better to do like credit cards with it. Like if you're gonna buy your trip to Aruba, like you want to put that on credit. You don't necessarily want to have that in stables, right? You want chargebacks. You want all these like features that are really valuable and consumer protecting. But I think that you want to probably do it in a way where, like it's the browser web server example I gave earlier. You want it to do it in a way where everyone speaks the same language, and you as a merchant can say, hey, I accept USDC or Visa or MasterCard or SEPA or whatever you want. And then you as the buyer can say, yeah, my agent has a credit card, a stablecoin wallet, and a credit card, and I have like rules in my agent on when it should use each. And that's like you just need a mutual way to talk to each other. Otherwise, you're going to end up with like someone who controls both sides. And I suspect that the verticalization ends up being, and the walled garden is like smaller than the like open in an ideal world.
All right, I think we gotta go a little off script now at this point. But okay, so I think it's beautiful. Like we're all gonna hold hands and like go in a circle, whatever. The margins of payments are designed to, one, of course, be accretive to the companies that deploy the infrastructure, but also to pay for risk and fraud and losses. And I think the thing I see critically missing in the market is the people who are like, well, we're going to take our margins all the way down and we're going to be completely open. Like, I just don't know how you get consumer adoption if you can't pay for the losses that are naturally going to occur.
I'll be honest, I didn't read the script.
We're going off script.
I think that this is like a set of things that we've kind of built up because of the nature of credit. But you can't reverse a stablecoin transaction, which is both good and bad, right? And if you start with immutable money, actually your risk profile is like completely inverted. The risk isn't on you as a merchant to accept stables. If the stables have landed in your wallet, like there's no clawback, which means you don't have payment risk. The risk is actually on the consumer because they need assurances that the person who's like saying they're going to give the service is actually going to provide the service. But you can build up consumer protections. Like you can have like escrow and other concepts that say like, hey, yeah, like this is going to be mediated and like, you know, chargeback. It's like we worked on cash for 100,000 years, or cash equivalents of like, I'm going to walk up to you and hand you shiny rock. Then you're going to give me sachet of arrows. I don't know what you're buying in, you know, 1000 BC. But we did this for a really long time and it worked. And then we, you know, recently have invented credit and like these rails that, and they're like extremely valuable and good, and they provide, you know, services that are valuable to consumers. But stablecoins are cash, right? That is the like, stablecoins don't have chargebacks, they have refunds. All these things are like solvable problems. And so the question is just like, what do you want the next generation of internet payments to be on? Like rails that a shocking number of them are still somewhere tied to a fax, or like things that were designed for like a digital native future?
Charlie, anything to add?
No.
All right. Covered it well. Let's go to adoption. I mean, we kind of picked up on some of what we're seeing. What are the biggest things that are blocking kind of broad adoption right now? And maybe Charlie, we'll start with you.
Again, probably a little bit use case specific, but take B2C, take retail. You've got to have a discoverable product catalog. You've got to have coordination on how that gets discovered. So you've got a chicken and egg scenario like you would in many cases where, while I think you can have a lot of cooperative parties, there are certainly a lot of interested parties in terms of the nature of their cooperation. So you can imagine people are trying to figure out where they want to sit, how to best jockey for the right position. I think those dynamics definitely inhibit or slow the pace of adoption to some degree, but you still need all those things to work well together. You can't have an agent make a purchase for a shirt if the agent can't find that shirt in the first place, and that's dependent somewhat on the retailer, or in large part on the retailer.
So you're giving them a big pitch to pie, I hear.
Yes, indeed. I think a lot of the activity that we're seeing is with startups, probably in the micro realm. One of the areas that, for example, where we are probably an inhibitor is like, we aspire to now make everything that we create, every way that a human can interact with Stripe, interactable by an agent. So take an example, an agent could go read our docs today, and that happens quite a bit, and we see a spike in that. But can an agent effectively navigate the dashboard the same way that a human would, and take action either on reporting or adjustments that they want to do on behalf of their user base? So I think that there's just a lot of work to be done. We talked about retrofitting, and I think one perspective is like wipe everything down and start brand new. But we're taking a place where we're retrofitting, but we're not having to retrofit that much. Our environment is already fairly well suited to it. But I think there's just a million little things like that need to be solved and will continue to be worked on to be solved before you really unlock at a massive scale.
So I'm hearing basically infrastructure outside of the payments realm is almost what, for discoverability, for checkout, for all of those pieces.
Yeah, and within the payments realm as well. And keep in mind, in this room, we're probably like the 1/10 of 1% who are really focused on this. You think about like, the 8 billion people in the world, and the engagement and the use of agents, and the engagement of use of agents to conduct commerce. Like even the demand is still relatively finite from that perspective.
Kahlil?
In the way the question was framed, what is blocking? I'm not sure that much is blocking. I'll say that at least in the customer conversations we have, we're not generally up against like an alternative solution, and so what is blocking is actually when can I use natural in those conversations, which is a solvable problem for us. I think like the frame of this conversation is very much like it's kind of what you were alluding to, is like it's very early. Like when I started having conversations before I incorporated the company in August, I was talking to like every frontier AI founder I could and every infra provider in financial services. And if you talked to even any YC founder who was at the frontier like 6 months ago, and you said like, do you have a mental model or conceptualization that your agent could execute payments? The answer was like almost always no. And you're like, okay, why not? Like, let me paint this picture for you. I understand what you do. Let me see if I can get you to concept like what your agent could do in the future. And then they're like, okay, like I start to understand it. But they're like, I've never seen it in production. Like, I can't touch it, I can't feel it, I don't get it. And it's like, okay, well, obviously it's gonna evolve. So like, I think I'm onto something. And when we were raising that round in August, there were people who could kind of like see around the corner and see that this was gonna be the future. But if you were asking for like, hey, we need real customer traction, then like my answer to you is like, there is none. Like, you just have to make a bet. So today, like even in the last 4 weeks or the last 8 weeks, I'd say the market sentiment is very different. You talk to YC founders, they have a mental model that their agents should be able to or could move money. Obviously, that's not like a material percentage of GDP yet, but I think the way, again, we frame it to the cap table or the banks we work with or anyone is like similar to the way AI felt like this is like slow and then everything all at once. And so I think what's so funny is I came to this Go Restive last year, and I was at my previous job, and I went down to the lobby because I told them I was leaving to explore what I wanted to do next. And they were like, how much money do you need to stay? And I was like, it's not about the money. And so it's very weird being here this year because it's like so much has happened in 12 months. And I think the real answer is like, if you ask me next year in 12 months, it will feel, again, like radically different than it does today. And 3 months is a long time with how fast this market is moving.
Yeah, I actually agree with Kahlil.
Surprise? No.
No. I think like me and Kahlil are like very aligned on a lot of these. I think all three of us, right, are like very much.
I would love for you to come work at Natural.
I'm sure you would. That sounded rude. I apologize.
No, it's like I'll make your incentives much better than they're at Coinbase.
I think that there's a lack of awareness, right? Like I'm pretty certain that 99% of people in this room weren't aware that 100 million payments have been done by agents in the last like 3 months on X402. If you're talking like concrete, what are the barriers to adoption right now? I think stablecoin penetration is like definitely the like current limiter on X402. There's like a couple million people who have stablecoin wallets. It's like easier than ever to get stablecoins these days, but it's like an education thing, and it's actually you have to educate both sides of the market. In a lot of ways, it's actually easier to educate the consumer side of the market because like consumers have crypto, they like are aware that stablecoins exist, right? They've been on TikTok, and then you have businesses who are like, wait, now I need to like operationalize stablecoins in my business. How do I do that? What are my legal constraints? What are my business processes? Like, can I send it to my Mercury account, right? Like it feels foreign and unknown to them compared to how they traditionally do payments, and businesses are like, they have very low risk tolerances, right? And so I think like features now, I checked before this meeting, there's been like 15,000 payments on X402 like between midnight and now. Like you can do this stuff, it's just like the information isn't equally distributed. And so, I think everyone in this room hopefully has a better concept of these things are now possible. It's not that they'll happen 5 years from now. It's like it's happening today. It's going to grow every week, every month. More utility, more value, and it's probably the like next wave of the internet.
So what I'm hearing across the board is there's no structural thing. It's basically awareness, adoption, infrastructure for discovery, and kind of an inevitability.
I'll also say a quick thank you, which is, one of the questions I got in August was, well, you're going to have to do so much market education. Like, do you think that is realistic? And it is helpful to have two massive companies doing all the market education for us so that we can be heads down building.
We can see how Kahlil recruits. I mean, strong arm and then flattery. So, so we have a lot of founders in the room, many of whom I'm sure are building in this space. We had a bunch of different things we could go into around how you think about X or Y or Z. I'm just going to have one kind of blanket question. What advice would you give to founders? And we can cut everywhere from multiple protocols to risk to kind of the changing nature of the landscape or wherever else you want to go. But just broadly, what advice do you have for someone trying to build in agentic payments today?
We're trying to enable what you're trying to create. So I'm not sure whatever it is that you might imagine or envision we want to help facilitate. Advice for founders. I may come back to you on that one.
All right, we'll end with you. Maybe we'll start with someone that's actually building. I mean, you're all building, but as a startup.
if you want to go build in agentic payments, best of luck. You don't want to compete against us. If you want to build on top of us, you're more than welcome. There was, so when I was exploring, there was I'll tell this funny story. I don't know that many people know it, but there was someone who I'd interviewed to join the co-founding team, and he was exploring something else in B2B lending. And I was like, I'm going to do agentic payments. This is the memo. This is my thesis. And I genuinely love payments. And I didn't feel like he had the real drive and urgency that I was looking for, and so I ended up passing. And then I found out that he had gone and raised on a tangentially close thesis after we had closed our round. And I saw him at an event, and I just said, I wish you the best of luck. You're genuinely going to need it.
So don't try is the advice I hear.
I mean, you're welcome to try, but I'm convicted in our own ability and our own team. So I'm not going to do anything other than say that.
All right, Erik.
That was a crazy answer. I think that people hear the advice of oh yeah, the people in the gold rush who made all the money were people building picks and shovels. And I think to some extent, we're in the phase of the market where everyone is trying to sell picks and shovels right now. And so I think my advice to founders is go pan for gold. Go and build novel use cases and products that take advantage of this new reality where agents can do payments. And be the leading solution, be the thing that goes viral on TikTok and Gen Z just starts using every day, and now they can do new things because they have this new capability. And so I see shockingly many companies that want to do agentic payments, and shockingly few companies that are trying to build consumer product. And so this seems like the right market for me.
Cool.
Yeah, I would echo that, and this is one where I would diverge from Kahlil. I would say do try. There is a lot to be done. Do go try, and would agree. Focus on the infrastructure. Those are usually big outcomes, but big risky bets. I think there's a lot in agentic commerce that can be done through the agent building process itself and facilitating the commerce through that agent.
Cool.
I think the only person that has the right to win agentic commerce is Stripe, and they're on this stage. So.
Oh, he had to sneak it in. Let's open it up for Q&A.
Hi, I'm Sheila. Yesterday I was at another event where somebody from Coinbase mentioned the 110 billion transactions. What they mentioned were 80% were really speculative, only 20% were really B2B. And I think also they're all mostly micropayments. The reason also being, I think, the trust factor. You mentioned, hey, stablecoins like cash, and in the olden days you'd give a rock and get arrows, but you both lived in the same little hut area. Today over the internet, you're over different countries, and I think the trust is really missing. So talk to us about how would you take that 20% to wherever you want to go, and all of us being in stablecoins?
Yeah, no, this is a great question. So it might have been a Kahlil who was talking yesterday. Okay. So there's two numbers with X402 that I track. One is total payments of any category, and then the second is transactions that I broadly consider utility. The total number of payments on X402 is actually about 210 million transactions. A lot of that is that's where the noise and the spam comes in, and so it's because there's two numbers, it becomes confusing. The roughly 100 to 110 million is ones where an independent third party has gone through and said we think that these are not spam. We think these are real transactions happening between an agent and a business. And so it is quite high. Second on trust, this is a great point. And it's, as I said, the trust shifts from the business needing to trust the consumer to not charge them back to the consumer needing to trust the business. I think the thing that's very much underappreciated is how much trust is already built into the way the internet works. And so if you're paying for something on Amazon.com and you're sending your payment to the DNS Amazon.com, chances are you can trust that they're going to provide you a service or make it right if something goes wrong. And so there's kind of core trust of big incumbents, big players that are well known, and then there's tail trust in my mind. And so tail trust, I think, comes down to how do we bootstrap reputation and an understanding of who are the good players and who are the people trying to do bad things as quickly as possible. And so there's now, emergent standards, one of them being a standard called 8004 that tries to do reputation for merchants in the agentic commerce space. But this is like a problem that, we're actively trying to solve both at Coinbase and kind of as an industry, right? It's like, how do you maximize the trust infrastructure that we already have on the internet, and then how do you build the new trust infrastructure for the next generation of use cases and companies?
You guys have any thoughts on trust, permissioning, authentication? Anything to add?
Well, yeah, so we take agent identity very seriously. The way broadly we model it without getting too into the weeds is like every agent ties back to an entity that we've KYC or KYB. There's no such thing as like a rogue agent ID. Those agents are delegated to act on behalf of someone else. So there's like an OAuth flow between that agent and someone else. We track instance of that agent running and all of the raw requests such that like if there's a dispute between whoever's money it is or the person who deployed the agent, we can mediate that dispute correctly, and we can figure out whether we're going to bear the burden of that liability or whether our customer is going to bear the burden of that liability. I think there's a really fun opportunity for us to go, fun genuinely, not fun sarcastically, to go from like, okay, if this is an internal network and we have this conceptualization of the entity and the agents and the transaction and the end counterparty and all of the metadata associated with that, like how do we build our own conceptualization of what the card network has in MCC for us? And so like there's a lot of stuff we're taking on this year.
Do anything?
Yeah, I would say before, we're kind of building with the agent in mind or building for the agent. Everything we do, we want to build for the agent, and I should put an asterisk. It's just about everything. I think like trust is an area, we're seeing real volume, but we've got a lot of kind of like safety checks in place where things that are largely autonomous still have kind of a set of eyes on them. I think we're going to be in that place for some period of time, or at least for a little bit, because they're, as much as we're enabling the great actors, we're going to enable the bad actors. So we are building most everything to be agent enabled, but with some caveats and with an eye toward responsibility in mind.
Amazing. Well, thank you all for joining today, and thanks for the engagement and participation.
Thanks so much.
Nice work, Lil.